when it comes to fixing things, the idea that something's going to be easier to fix when it's bigger is, oh, well, I'm going to roll that snowball when it just gets big enough, right? And it's, eventually you got this giant snowball rolling down the mountain and it's unstoppable. I mean, momentum is very difficult. And if you can imagine 10% mistake when you're doing a $10,000 job is $1,000, 10% mistake when you're doing a $1 million job is $100,000. Like which one of those do you want to eat, right?
Yeah. Hey guys, Todd here from ConstructionLeadingEdge.com. Thanks for tuning in to the podcast. Today we're going to be talking about how CEOs think differently about money and financial systems. Got an interview with Luke Holcomb, who works with construction business owners every day, helping them to put in place financial systems and to optimize those systems. Here's what you're going to hear about in our conversation: how CEOs think differently about money and financial systems, some of the financial habits of successful construction CEOs, what's in it for you to have your precision financial systems in place. We'll talk about some common fears that construction business owners have when it comes to the financial side of the business. We dig into how and why you can lose money, could be losing money, even if your job cost reports look profitable, specifically how a cost plus builder can actually lose money. The impact of mismanaging finances, some of the most common pitfalls to avoid when it comes to your bookkeeping. You may be stepping in, you may actually be stuck in one of these traps right now that you want to stay out of. Luke explains the story that your balance sheet is trying to tell you. We talk about how you could potentially sell yourself into oblivion, how some people grow their business and self-destruct, how to avoid that. The role of a fractional CFO, a fractional chief financial officer, how a CEO thinks differently about financial management, and then Luke has a special offer to extend to you as podcast listeners from the Apparatus Contractor Services team. And then after you listen to this one, you may want to go back and listen to episode 182 of the podcast with Steve Kreitzberg, who is the founder of Apparatus Contractor Services. Great conversation, lots of great stuff in there. So here we go. Let's get to my conversation with Luke Holcomb of Apparatus Contractor Services. Enjoy. All right, Luke, welcome to the podcast. How are you doing today?
Great, Todd. How are you?
Excellent. So we've known each other for several years now. So introduce yourself. Talk about what you do, what you guys do at Apparatus Contractor Services, what you do there specifically, and tell us a little bit about your background.
Okay, yeah. So my name is Luke Holcomb. I've been in the construction industry since I was, 18 years old. I started out pulling nails and worked my way up. I was always interested in whatever the next complicated thing was, and so I was a carpenter. I got into framing, then project management. I mean, it's a very typical story for a lot of guys. Became a general contractor, did that for a while, and would get to situations where it was really easy for me to figure out, what are the operational issues that are going on, putting operational controls in place, even putting financial controls in place. But business finance is just this thing that I was always interested in. And it always, every time I'd see a construction company fail, it would be, oh, they grew too fast, or, oh, they did this, or, oh, they did that. And it always just really intrigued me. And I was looking for something where I could, not have to be in the field anymore. And I've met Steve Kreitzberg, the president of Apparatus, and it was just, square peg, square hole. So in my work here, I've helped clients, design, come aboard, design their accounting system, design their processes. And then I've worked my way up here, and now I'm the vice president of operations. So I oversee the operations of all the work we do. And for us, the work that we do at Apparatus is we take contractors, we get them on a very solid footing of understanding their finances, understanding, where their jobs are at, how profitable their company is. A couple of years ago, we started doing fractional CFO services. So now we're looking at balance sheet ratios, strategic cash planning, funding, things like that to help. Our goal really is to give contractors the financial tools that they need. Because you've been in the industry a long time. It's just not a natural fit for guys. Contractors didn't get to where they're at through business school. Typically, they got there, kind of the same way I did. They started, in a company somewhere, whether it's a project manager, a superintendent, a carpenter, and they just kept working their way up. And now they're a business owner, and they're responsible for a lot more than just construction.
Yeah, absolutely. So some of the problems that construction business owners deal with, I think, are pretty well known. If you just look at the failure rate of construction businesses, there's an interesting study that the FMI Corp has done year over year. I think they started in 2008 and they revisited and they talk about why do successful construction businesses fail, and we're not going to get into all of that, but a big reason is financial controls. I mean, frankly, most of the reasons land between the ears of the owner, which is we have lots of podcast episodes about that, but it comes down to financial controls. So what I'm thinking is, here's how I would say this. If construction business owners believed the financial side of the business was as important as it actually is, then we wouldn't have this problem, right? When I look at businesses, there's just there's some beliefs. There's some things people believe to be true that are not true. And there was a friend of mine once said something to the effect of, if something goes wrong and something surprises you, then you need to go back and look at something you believed because it's wrong. What you believed is wrong. So what we're going to talk about today, there are some misconceptions around the financial side of a construction business, and some misconceptions specifically that construction business owners have. Could be misconceptions, could be some things they just don't know they don't know. Like, I was one of those guys. I went through school, got an engineering degree, was out managing multi-million-dollar projects, and said, you know what? I can do this for myself. And I was really good at building stuff, but I didn't know what I didn't know. I had no idea about the financial side of it. The whole cash flow, I never worried about cash flow working for a $300 million a year commercial GC, but suddenly I was dealing with cash flow issues that nobody had ever told me about. So a lot of these things we're going to talk about, it's, if you're listening to this, it's not your fault, right? These are just things that aren't taught, and they're just maybe some things that you believe to be true that aren't true, and some things you just don't know about. So we're going to dig into some of these misconceptions. Luke, you have the vantage point of working with a lot of construction business owners specifically about the financial side, so you get to see the trends and the commonalities. So I think it's going to be pretty enlightening to talk about this. So let's talk about this first one, this misconception that sounds something like managing the financial side of a business or managing finances. It's something that money guys do. It's something that CPAs do. It's something that Wall Street guys do. Not me. I'm a fill in the blank. I'm a contractor. I build decks. I build custom homes. That's not me. So first of all, how prevalent is that in your experience?
I think it's a large part of it. And when it comes down to it, you talked about, the kind of belief, the story we're telling ourselves. You can, at an intellectual level, you can understand that this is important or that you need to stay on top of it. But at the end of the day, subs are the people that are calling you, homeowners are the people that are calling you wondering, why something isn't, the exact paint color they thought it was going to be, or, why the cabinets look the way they do, or, and so for a business owner, you're wearing all of these hats, you're concerned about, keeping sales going, keeping projects running smoothly, the weather forecast over the next 10 days, are, Brad and Sarah going to get a divorce by the time this project is over? And, you have to wear all of these hats, and the finance part, it's just not in front of your face. And so it's easy to, to some extent ignore for a while. And I think what people need to understand, or contractors need to understand, and just like you said, as soon as you take that step from, you're not a project manager anymore. Now you're managing a business, and you're a business owner, and you're responsible for all the aspects of that business. And it's just the diligence of sitting down and understanding, hey, this is a giant function of this. No business is going to it's not going to grow effectively. It's not going to stay profitable if it is profitable now, if you don't, it's like a ship without a steering wheel or something, right? So it's just kind of meandering along, getting blown by the wind, and you are the captain of the ship. It's your responsibility to set the course and to make sure the rudder stays where it's supposed to be. And you just have to sit down and do it. And I think a lot of guys, give themselves a pass by saying, well, that's complicated, or I don't understand it. It's just like you said, you don't know what you don't know. Now there's so many tools out there, whether it's, education online, whether it's, services like ours that you can partner with, that there's really no excuse for not doing something. Contractors didn't get to where they're at by putting their head in the sand and ignoring problems when things got hard. They worked at it. They overcame other obstacles, other hurdles. Learning about this is no different.
Yeah. I'm thinking about the book Traction. If you're familiar with the EOS, Entrepreneur Operating System, and the book Traction, when they talk about there are three major functions of any business, whether you're making widgets or you're building luxury homes or birthday cakes, there are at a minimum of three major functions: sales function, operations, and finance. So somebody has to sell the widget, the birthday cake, the luxury home. Somebody has to deliver, fulfill, and make this thing. And then somebody has to count the money. They have to send the invoice out and they have to count the money. And I think construction business owners are probably guilty of focusing on one of those first two. I'm a sales guy, or I'm an operations guy. Yeah. And I know very, very few people who were a CPA who said, you know what, I'm going to start a construction company. I've run into a few, and I'll tell you what, they're very successful. And
they are.
I've worked with, when I was managing large industrial projects, there was a big regional general contractor, and the architect that we were working with sort of joked, the name of the company was Pepper Construction. And he said, Pepper they're really an accounting firm masquerading as a construction company, which he probably meant a little bit as an insult. But you know what? Those guys knew what they were doing. And there's a reason they were doing $1 billion a year. It's because they were, at least, they put an equal amount of importance on finance as they do on everything else. So let's talk about this. If we talk about the underlying reasons why people they stay away from the financial side, there's a lot of fear around it, right? And I can tell you from my experience, I remember running my business. You're like, it feels like kind of operating on this gut feel. And when you do look at your bank balance and you look at what's going out, what's coming in, and cash flow, sometimes it's easier just to avoid those things. Bury your head in the sand. Oh, I'm going to go out and do some busy work. And then, oh, shoot, I didn't have time to work on the sending out invoices or whatever because of fear. And in your experience, maybe I'm the only guy who's ever done that kind of dumb stuff out of fear, but in your experience, how big of an issue is fear of when it comes to this?
It's gigantic. And we've seen it a number of times. And that's one of the big problems that, we have to solve because, a lot, like a scenario we'll see a lot is we have a strong owner. They've overcome a ton of obstacles. They've had to learn a lot along the way. And part of what they've come to realize is that they want control over everything. And so they're trying to manage their QuickBooks file. They're doing it at night. They're doing it, whenever they get a chance, on the weekends. And the reality is that's not their training. And just like you said, they don't know what they don't know. I managed my own QuickBooks files for a while, and I thought I was doing pretty good. And when I hired a professional to come in, they were like, okay, it's not as bad as you think. I was like, what are you talking about? This is great. I'm doing everything right, and I had no idea back then. Right. And so we have that problem. And what we'll see is they usually have that key person in the office that sees it from the outside, and they're telling, the owner, hey, we need to get somebody in here that knows what they're doing. Hey, we need to do this. We need to do that. They see the time suck and the energy suck that it's taken away from the owner, because, one thing that we believe in is unique ability. It's a kind of a Dan Sullivan construct. And, each person has a very specific, unique ability. And maybe it is sales, maybe it is operations. And, you have to have that person in house, like you said, or you have to have that person on your team that their unique ability is the finance side. And that's where we come in. And so what we've had to realize is that when we take a client in, we spend some time navigating this, right? We have to say, hey, these things aren't as accurate as you thought they were. Hey, I know you have a QuickBooks file, but, it's not up to date. We can look at this information. We know it's not accurate. And that fear, unfortunately, we've seen situations where the fear has pulled them back away and caused them to just, continue doing the same thing they were doing before, which is unfortunate, but that's a big part of, if you can overcome that fear, and it's just a matter of telling yourself the right story, right? So instead of, telling yourself that you can't do it or you're not able to, just say, hey, there's resources out there. I can learn this, and giving yourself a break too. Like you said, it's not like you skipped the class in project management that talked about managing company finances. It didn't exist. Right. And so you don't know what you don't know. There's no shame in that. And there's this old Chinese proverb of the best time to plant a tree was 20 years ago. The second best time is today. Right. So don't let your past failures dictate how you move forward.
Yeah.
You got to keep focused on where you want to be.
Yep. It's a good idea. That's good advice. A couple of thoughts. I think there was a book by Craig Groeschel, and he talked about the power to change, and he talks about habits. And at the root, if you want to develop new habits, there's behaviors, but if you have bad habits you want to change, or if you have new habits you want to show up in your life, he said it's really an identity issue. So if you've created this identity, I'm a construction guy, I don't do numbers, that's what you're going to believe, right? If you want to be a successful construction business owner, then you need to take on the identity, embrace the identity. I am an entrepreneur. I am a business owner. I'm not just a builder. I'm a business owner. And that requires understanding some of these things that I'm not good at. But it's an identity issue. It's like, this is something CEOs do. CEOs manage their finances. They manage their people. They grow their team. So if you want to take on a new identity, you need to take on new habits. And if you want to, it's kind of circular. If you want to change your habits, you have to embrace that new identity. So what you're saying, I want to be more of a CEO and less of a builder. What do CEOs do? They manage their finances. So my question would be, when are you going to start doing that? A lot of people would say, well, when I get to a certain point, then I will put my systems in place. So like when things settle down, or when I'm making money, then I'll invest in my bookkeeping system, then I'll hire somebody. It's this win-then fallacy. It's sort of like saying, when I have more time, then I'll figure out how to manage my time. When my broken leg feels better, then I'll walk to the hospital to get it fixed. It's completely irrational. And I think there's a lot of this when it comes to finances. Like, when I get to this certain point, when my business grows to a certain point, then I will do this stuff. And the reality is, your business may never grow to that point until you do that stuff.
Yeah. And it won't unless it's for dumb luck. I mean, that's the thing. We've have a client that we've brought on recently that, what I love to see there is that he is small. He's just starting out and he's getting this stuff sorted. And we can look at, the path he was headed down, and we can say, hey, 6 months from now, you would have been lucky to be in business if you kept down this path. And so we need to do this. We need to do this. You need to talk to a bank about this. We're going to clean up your financial statements. They're going to look fine. A bank's going to want to talk to you because they want to talk to people that are on top of this stuff before it's an issue, right? And it's just like you said. I mean, you have to understand that you're going to be the person that's managing a business. If you want to be a builder and that's it, go back to project managing. Don't put, your family at risk. Don't put your business at risk. It just doesn't make sense. And when it comes to fixing things, the idea that something's going to be easier to fix when it's bigger is like, oh, well, I'm going to, roll that snowball when it just gets big enough. Right. And it's, eventually you got this giant snowball rolling down the mountain and it's unstoppable. I mean, momentum is very difficult. And if you can imagine, a 10% mistake when you're doing a $10,000 job is $1,000, 10% mistake when you're doing $1 million job is $100,000. Like, which one of those do you want to eat? Right.
Yeah. That's a great point. Is I'll just wait and fix it later. Yeah. When you say it out loud, it makes no sense. I'll wait and fix it when it's bigger. And it's the old saying, a stitch in time saves 9. Well, when it comes to your financial systems, a stitch in time could save your entire business. A stitch in time up front will save the whole thing from unraveling. Because if you're listening to this, think about a problem that you let go too long. And it grows legs, it gets bigger, it touches more people, and it's so hard to unravel. Some are, like, when it comes to financial, if you set up your finances wrong and you don't have your bookkeeping set up right, you may not be able to unravel it. It may just be unfixable.
Yeah.
Or by the time you know there's a problem, it's too late. So, another great piece of advice would be put your systems in place while you're small. Put in big boy, big girl systems while you're small before you need them. I think that's another mistake I see people make, is they wait until things break. And then when we get overwhelmed, then we'll figure out our systems. That's just kicking the can down the road. And maybe it works, but it's really hard.
Right. Well, that's like, I'm married. I know you're married. It would be like, you got a problem with your spouse. Let's just not talk about it and see how it goes away. I'm sure it's not going to get bigger. I'm sure, we're both not going to get more angry about it. I'm sure the conversation is just going to be easier by the time we get around to talking about it. Right. I mean, it's nonsense. Everyone who's tried that knows it doesn't work. Yeah.
When you say it out loud, like, this will probably take care of itself. It's just going to resolve itself. That's classic burying your head in the sand mentality. So good stuff. All right. So let's talk about, we're talking to folks who have bookkeeping systems in place. They're looking at at least job cost reports. And there's this misconception that, hey, my jobs are profitable. Maybe more specifically, I'm looking at my job cost reports and it looks like I'm making money. That's all I need to know. Right. So what kind of problems come from believing this misconception? My jobs are profitable. That's all I need to know.
Right. Yeah. I mean, that comes down to some of the things we talked about before of like cash flow, other stuff. And I think it's an easy misconception to have, because the likelihood, just like your career path, just like my career path, you go from managing projects to managing a company. And what works on a project level, you see you're making money. You're saying, oh, I'm making $30,000 or $50,000 off of that project. I'm going to be great. And you're not considering that you have $10,000 to $20,000 a month of overhead costs that you need to cover, right? And so it's just a very simple thing. You can actually have profitable projects, and as a company wide, you can be out of money at the end of the year, right? And so, if your overhead, just to keep numbers simple, let's say your overhead for the year is $10. If you're making $1 on each project, that means you have to do 10 projects that year to cover your overhead. And that's another, I think, problem that people think is they feel like they've solved the problem once they've sold the project, right? And so they've sold the project, they ran all the numbers, they knew what their profit was supposed to be, and that's the number they have in their head moving forward. They come into a problem, oh, the sub you thought was going to do it isn't available anymore. Now you have to pay this sub a little more. You make that individual decision, and that's great, and you're like, okay, I know that's going to take a hit, but I'll be all right. Something else comes along, there's disagreement with the homeowner about what was in scope, what was out of scope. Now you're covering this. Again, you're making the individual decision. Maybe it's still the right decision, but, and you're accepting that hit, but now you're not starting to think about it in an aggregate, right? You're thinking about it as individual hits to profitability. When you take a step back, a project you thought you were going to have, let's say 30% margin on, now you have 10 or 15% margin on. And that impacts, well, how's the office rent going to get paid if you're missing that much profit? How are you going to get paid as an owner if you're missing that much profit? How is, the insurance bill that's coming up, the gas, everything, right? So I think looking at individual projects, or even looking just at the profit and loss, I think a lot of problems is people look at their profit and loss statement and they say, well, it says I'm making money. They don't understand that that's not including stuff that's, servicing debt. So if you have a truck payment that's going out, if you have equipment payments, the interest portion of those payments is hitting your profit and loss statement, but none of the other part is. If you're an owner and you're taking a draw rather than a paycheck, also not hitting the profit and loss. And so you can get this really unrealistic view of your company just from not understanding, what all goes into this, or not having like you talked about, your systems set up. A lot of guys are like, once we get going, I'll put myself on payroll. It's like, well, you're not going to get going because, you think your company is this profitable. It's actually this profitable. And we're not seeing that because you're not included in payroll cost.
Yeah. Yeah. I think there's a misconception, especially among custom builders who are cost plus. And they think, well, I'm cost plus. Yeah. And maybe that works when it's just you and your truck. But if you have overhead cost, it's very possible that you can be a cost plus builder and lose money. And that sounds crazy. How can I possibly lose money if I'm doing it cost plus? Because you have overhead. And if you're not covering your overhead, then you're not making money. And I've spoken with several cost plus builders who would say, we get to the end of the year and we're like 3% net. And that's just not worth it. We're turning over $6, $8, $10 million a year, and we have 3 or 4% left. That doesn't make sense. We're working too hard for that. What's the problem? And sounds like a lot of that is looking at the wrong information, just looking at, well, right, we want to look at the good stuff. Well, I'm not really sure about overall, so I'll go look at my job cost reports. Oh, I'll pat myself on the back. That feels good, right?
Right. Or, yeah, it does. And you feel like you're doing a good job. Even, I think, and I want to say job costing is absolutely critical. It is critical for anyone trying to manage a construction company, but it's just not the whole picture, right? And so you'll have platforms like CoConstruct, Builder Trend, incredibly useful platforms. they'll give you a budget versus actual. It'll tell you that project level profitability, but it doesn't give you all the information. I saw during COVID, it was horrible. We would see guys who they were selling profitable work. They were willing to perform that work. And then they would have supply chain issues, and they couldn't install this pump until this date, or this thing until this date. It was delayed again, or, the site work got pushed back a month because it was just super wet that month. And the problem that happens is, when you look at all the numbers, is your job still profitable? Great. Yeah, it is. Does your office rent, your cell phones, your, equipment payments, do any of those things care that you were delayed a month and couldn't bill your customer? No, they don't. So now what that profit was supposed to carry 1 month, now it's carrying 2 months, and it's just not enough.
Yeah. That is a hidden cost. When you lose production days, if you're not turning days into dollars, that doesn't show up anywhere. And it certainly doesn't show up on your job cost reports. It does show up at the end of the year when you look at your overall profitability. You're like, we had all this work. We still have all of this work in backlog. And when I look at my job cost reports, this is not profitable. But
yeah,
why don't I have any money in the bank? And it's because of issues like that. It's turning backlog into revenue at the right pace. And that's a hidden profit bleed that a lot of people, they just can't see it. They're like, why? They feel it, but they can't see it. And they don't know why. And it's because they're not really looking at the right information. And speaking of information, let's talk about financial statements. Sometimes these can be intimidating and feel complex, but what's the stack of financial statements that a construction business owner should be looking at every month?
Yeah. So it's very straightforward, right? So, and I would start with, one that probably everybody is already looking at, or two that everyone is already looking at. That would be, project level profit and loss, right? It would be company level profit and loss. Those are probably in your face already, or income statements if you're not using QuickBooks. But the really important ones are balance sheet, and I think that one can get complicated for people. They don't know. They're like, yeah, it shows how much money I had in my bank account. What do I do with that? But it's, is your financial control set up to give you the information you need is a huge part of that. So is your accounts payable, like the money you owe other people, is that accurate on there? Is the money that people owe you, is that accurate? We do, I think the easiest way to explain it would be deferred revenue, right? And so it's that situation you're talking about where they don't realize it until the end of the year. But what we do is we look at, hey, sales, like whatever money comes in your bank, that is not what is driving profitability, right? What you are producing drives profitability. And so if you miss a month where you're not building on that project, you're also not making money on that project. And so we make, there's an equation, it's a financing equation, but there's an equation and a standard that goes along with us. It's a simple ratio, but we look at, what percentage of expected cost did you produce that month? And that's the percentage of income we're going to use for that month.
Hey guys, Todd here. And if you're a custom home builder, a remodeler, or a general contractor, and you'd like to learn how to get paid for estimates, if you're tired of giving away your time and expertise, giving away 30, 60, 80 hours a month, every month for free, then there's a free masterclass that we're making available to you for the first time in a few years. It's our Get Paid for Estimates masterclass that hundreds of builders, remodelers, and GCs have used in the past few years to end the practice of free estimates. When you enroll in this free masterclass, there are three main things that you'll learn. Number one, you'll learn that your ideal customer wants to pay you for pre-construction work because it's in their best interest. Number two, you'll learn that it's really not hard to sell your prospect on it when you get clear on just a few things. And then number 3, you'll learn the 5-piece get paid for estimates bridge that you need to have in place in order to finally get paid for estimates. You'll get everything you need to get paid for estimates. The sales scripts with the exact questions you can ask your prospect to get them to see the value in it, an agreement template you can use, pricing guidance. You'll hear interviews with builders and remodelers and general contractors who have done this successfully. You're going to get everything you need to have the confidence to go out and actually do it. So if you're ready to end the practice of free estimates, then go enroll in the free Get Paid for Estimates masterclass over at constructionleadingedge.com/start today. Hit pause on this episode, go to constructionleadingedge.com/start, START, and let's join the movement to end the practice of free estimates. Now, let's get back to the episode.
For a home builder, I think everyone's had this situation where they get a $200,000 deposit on the next phase of work 1 month. It makes that month look wildly profitable. It's, the next month they're spending all of that money. So that month looks wildly unprofitable. And we make entries, and it's an accounting standard that, ties all that together to where you're seeing what you're actually making, not what money came in your bank or what you invoiced for or anything like that. And then all that goes into the balance sheet. And so, if, kind of one of the things we look at is, one's called the acid test, one's a current ratio. And it's, those all sound like big terms. They're not, the first time you went to the truck looking for the board stretcher, that sounded like a big term too. These are very straightforward, very simple. And what it is just, what are the things that you're going to owe people in the next 30 days versus what are the things that people owe you in the next 30 days or stuff you have on hand already. And so we're always looking at what's your company's cash position essentially. And that's where you really keep people out of trouble, is saying, hey, if everything's settled, you either 1, you have a good amount of money sitting here, or 2, you don't. And we need to go find it somewhere. And so that's, looking ahead. And I think a lot of times I always hear this, and I'm sure you've heard it too. I think every contractor's heard it, right? Banks only want to lend you money when you don't need it. Well, that's because the signs of the problem start about 3 months before you feel the problem. And if you're not, looking at this stuff, if you don't have someone that can help you look over this stuff, you're just not going to see it. And, a lot of good contractors, guys are doing, they're doing quality builds. They're doing, they're doing right by their customers. They know how to get in front of issues like this. They get blindsided and go out of business because they didn't understand, how to review those things.
So when we talk about the balance sheet, what are the top 2 or 3 things that the balance sheet, maybe there are more, but what are the most important things that the balance sheet tells a business owner?
Yeah. In essence, it's just how valuable your business is, right? And so it's taking the combination of how much assets you have on hand, whether that be equipment that you own, invoices that you're going to get that are going to get paid soon to your customers, cash in the bank. It could even be work, like for a subcontractor. We talked about what it looks like for a home builder, and that you get a big deposit. Commercial subcontractors are the complete opposite, right? So they could have a ton of work that they've built in that they haven't billed for yet, and that's actually earned money. So that could actually be sitting on the balance sheet as something that you have of value. Credit card debt, long-term loans, all of those are in there as well. Money that you owe trades, stuff like that. And those are the big things. And those just get summed up into equity, essentially. What is this business worth as a, combination of the financial things that you have or are coming to you versus the financial things that you have to pay out. what is this business worth?
So I'm curious, for a small business owner, they might be thinking, all right, I get it if I'm a publicly traded company to be able to see what's the business worth, but I don't have any plans on selling my business, or I don't have investors. So what's in it for me to know how valuable my business is?
Yeah, that's a great question. So when you think of, as a contractor, you think of getting bigger, you're probably thinking about selling more work. But if you're, and you've seen it too, you hear the thing of they grew too fast and they went out of business. Well, what happened there was they sold more work and they weren't able to perform that work, well enough or in enough time frame, and their business kept getting worth less and less and less. They performed that work by using debt. They performed that work by, slow paying trades. They did, any of that stuff. And it just keeps getting worth less and less and less until you wake up one day and you don't, they don't have the money to pay everyone that they owe money to. I mean, that's the hard truth of it. And that's when, guys end up closing their doors or filing for bankruptcy or whatever. And everyone's surprised because, they were doing great. I saw their trucks going down the road. They're wrapped. Everyone knew who they were. They were getting appointments all the time. They were selling, they were always busy. And it's like, well, they were busy going out of business because they weren't managing that aspect of their business. And so what we like to see contractors do is when you look at growing the value of your business, and if, for young guys, you probably just can't ever think of it, but eventually you're either going to want to sell, you're going to want to hand it over to someone, maybe your son or daughter or whatever. And, maybe an employee. And when you get to that point, you want to hand something over that's valuable. You don't want to hand over something that's on fire. It would be, you get a call from a lawyer like, well, your great uncle passed away and he left you his estate, and you get, great. What do I get? You're like, well, about $30,000 in credit card debt and, a house that's over mortgaged. And so you're going to need to write a check for about 60 grand. That's not how things work with inheritance, but that would be the same kind of idea.
Yeah. So yeah, let's talk about this for just a minute. I think some people would be like, how can you possibly sell yourself out of business? How can you sell yourself into oblivion? How can you grow and implode your business? So what I heard you say was, like, there are companies that they go out and they grow and they take on, take on, I'm just spitballing here, but what I'm envisioning is we're going to grow, we're going to take on more market share, we're going to buy more vehicles, rent more office space, maybe hire more people, take on a line of credit, take on more debt, grow, we're going to sell. But so if they're selling more work, how does that financially work? How do they sell themselves out of business? Can you talk about what that might look like?
Yeah. I think it happens really a couple of ways, right? One is that as you're growing, and this gets back to what we started talking about of when are you going to fix the problem, right? If you're the type of person that's going to fix a problem later, well, any mistake you were making and you're growing your business, let's say you want to grow your sales, 20% more or 50% more. A lot of companies go out there and try to double their sales the next year. If you're doing that and you're making mistakes where you were, well, now those mistakes cost double, right? Every single one of them. And what's likely going to happen is that at scale, you hire an employee, like let's say you hire a project manager because you're trying to grow. Well, turns out he wasn't the right fit for the position and you got to fire him. So he's made some big mistakes that have cost you money. You've invested in his salary for the period of time that it took for you to figure that out. That's cost you money. And so growing can kind of be expensive, right? That's one way that it can happen. And then another way is you can have more moderate growth. And at the end of the year, you can look at it and say, well, at the end of the year, with all the projects we did, all the money we made, all the overhead we had to cover, we, still made a profit at the end of the year. Well, that's not how things work either, right? When money comes in, when money goes out. And so you may be profitable at the end of the year, but you hit some sort of cash shortfall at some point in the middle of the year. And that can put you out of business still. And the way we solve that is looking at working capital. There's some kind of guidelines in the industry of, a ratio of what you want your working capital to be as a portion of sales. And it's just very straightforward, right? If a commercial electrician is out there doing, $10 million worth of work one year, let's say they have to have $300,000 in the bank, to fund that work until they get paid by the GCs. Well, now they want to go 20 million. Now they're going to need to have $600,000 in the bank, and if they're not, and in the bank is relative, right? It's not in the bank. It's broken up between, who owes you, what you owe people, how much you've produced, what's your credit card debt, all of that stuff. And if you're not paying attention to that, you can just get in a rough spot, and it stinks because you get, just cash flow of money doesn't always come in exactly when you need it. Any construction company owner, already knows that one, right? And so I think what they don't realize is that there's ways to get ahead of it. And so instead of reacting to situations that are a surprise to you, you can take strategic steps, get ahead of those situations. You can see them coming. And now you're spending your weekends with your family and you've handled a problem well before it ever materializes.
Yeah. Seeing the punch coming instead of just waiting for it to hit you as a surprise. Yeah, that's good.
Yeah.
Well, let's talk about another misconception that a lot of small business owners have, and it goes something like, well, I can't afford to pay somebody to do this, or I can't afford somebody to deal with all the financial stuff. I just can't afford it. So let's talk about some of the common approaches that small construction business owners take, and then some of the pitfalls to watch out for there. So the first one, and I'm thinking as a business grows, one of the first stages is probably what sounds like what you did and what I did, which is DIY. I'll do it yourself. I'll do my own books. There's probably a litany of pitfalls here, but what are some of when you look at your clients who've come on board and they were DIYing it, what were some of the biggest problems that they were having that maybe they didn't even know about?
Yeah. I mean, I think the biggest one is you think you have everything. And one question we ask new clients is, are your books up to date? Right? Folks that are DIYing, what they think of as up to date is that things are entered. Let's say you're using QuickBooks, the first thing you're going to go to is the bank feed, and you're just going to make sure it's empty, right? That's it. You're going to try to categorize every cost and every dollar that comes in as, where it's supposed to go. And that just isn't a catch-all, right? It doesn't make the financial entries that need to occur at the end of the month. It doesn't have, one of the big things that I see people not doing is just reconciliations, and they think they're reconciled. Maybe they refer to that bank feed as reconciling, but that's not what it is, right? So reconciliation is you take the bank statement from your bank and you sit there and go through it and mark down, say, yep, we have that transaction. Yep, we have that transaction. Yep, we have that transaction. Oh, I don't know why, but we don't have that transaction. We need to put it in there. Or we have these 3 transactions, but they actually never went through the bank. I don't know why, right? It could be something where, a sub never cashed a check or whatever, right? And so we see that things aren't reconciled. And then there's, QuickBooks is just in its nature, it's a software system, right? And so you can think you're doing something correctly, and really you're not. And so, another one we see a lot of is you don't actually know how much you owe anybody or how much people owe you. And that's a pretty big problem, because if someone comes to your door and they say, hey man, you owe me another $3,000 for this. Do you know, do you have the records to be able to back that up? and a lot of guys don't.
Yeah.
And so they could end up double paying. They could, whatever the case may be.
The next step on that progression is often a family member, husband, wife, aunt, uncle, mom, dad does bookkeeping. What are some of the issues with that approach of having friends and family do your books?
One, your friends and family, know a lot more than you probably want them to. That could be a big one. Unfortunately, we've seen stuff where, embezzlement happens. And so even if it's a close relative, it's still possible. But I think one big issue there is you're not trained as a contractor. You're just not. And there's nothing wrong with this. And like you said, there's these anomalies where, we have clients that are CPAs. They still hire us because they know the value of what we do. But our clients, because they're doing their job is running a construction company and reviewing these things, managing these things. It's not their job to produce them, right? And so we have those guys who come in, and that's the anomaly. But most construction owners don't, they just don't know what they don't know. And so it would be like, them trying to manage any other aspect of their business, like taking one of our bookkeepers who they're fantastic construction accountants, but do they know how to pour foundation walls? Do they know how to, frame a house or a set of stairs or, lay out a site? They don't. Right. And so you as a construction owner relying on yourself to manage and know what is a good job, what is a bad job when it comes to accounting. It's usually just not a tool set that you have. And you go to a company like us, just like your company, we have our own controls in place. Managing your company's books is kind of like project managing, right? We have checklists that everyone has to go through. We have procedures. We have follow-up. We have internal audits. And that's how, we have a process that keeps problems from occurring. And as a construction owner, you just don't know those.
Yeah.
And so if you're hiring, a family member or even someone else, even if they have some sort of experience, you just don't know that. You don't know what to be looking for to say, this is right, this is wrong.
Yeah. And so that leads to the next one. Excuse me. The next on the progression is hiring a local bookkeeper, small business bookkeeper. Maybe they are doing it on the side, but they're working with a variety of businesses. What are some of the issues you've seen there?
Yeah, I just start with, what we just talked about is you don't know what you're supposed to be managing. You don't know how you verify, is this right? Is this wrong? That's a good starting point. And then you're dealing with people who, we've seen a lot of people who, understanding how to manipulate QuickBooks well is not accounting. Those are two very distinct things, right? And I think in the construction industry specifically, it's really easy to confuse understanding how to manipulate QuickBooks with accounting, and it's not. And so you don't end up with the right information. You don't end up with accurate information. You're making decisions based on numbers that don't exist. And even if you're actively pushing into this, if as a business owner you're looking at your balance sheet, if you're managing your company-wide profit and loss, if you're doing all of that, but the numbers are wrong, we have one of the things that really gives me a kick is when we have someone come in and we just show them your numbers are wrong. We validate everything when a client comes in. We get records from their last tax filing. We match that with the books. If it doesn't match, we say, why doesn't this match? We go back another year. We try to match that one. If that doesn't match, then we know there's something pretty substantial going on here, right? And it could be a number of things, but the books don't match reality at that point. And so, basically what we have to do is start a fresh QuickBooks file and use beginning balances of that last tax filing. And it would be like, going into a project and the block masons didn't lay things square and you're trying to frame on top of it. How's that going to work out? Well, it's not going to work out very well. And accounting's no different. And so what we have to do is say, hey, we got to scrape that. We have to start at, we have to get to square. And we get the same thing every time. What about all my information? How am I going to know what my numbers were? And it's like, your numbers weren't right. We've proven this. They weren't right. So why do you want them?
Yeah.
And they can't separate that. And so you're trying to make good decisions based off bad information. It means you're going to make bad decisions, right?
Yeah. And then the other issue I've seen with hiring a one-person solopreneur, if you will, somebody to do it part-time, and this would be either a family member, they could be a full-time bookkeeper who in many cases they work by themselves and they have one bookkeeper on the team, and it could be even hiring somebody in-house. I've seen this a few times when that person gets sick or they decide to shut down their business or they decide to go get a different job. You have no redundancy. And in some cases, they leave suddenly. Mm-hmm. And your business is still running. You have no bench strength, no continuity. And that's a risk. So if you have one person, you have a single point of failure for your the financial side of your business, that's a risk that you should probably have some plans in place for. What happens if this person leaves, gets sick, quits, etc.? That is a definite
hit by bus, whatever. Yeah,
definitely. All right, so let's paint a picture. We've talked about some of the pitfalls to watch out for. Let's paint a picture of what's possible. What does it look like when someone goes through the work, they pull their head out of the sand, they face their fears, they embrace that new identity. All right, I'm a CEO, and this is what CEOs do, and they get their precision bookkeeping system in place. What does that future look like for them? Do you have some examples you can share of what happens? What can people expect when they do this?
Yeah, it's really lovely to see, and I think that's one of the most rewarding parts of the work we do is there's almost always a ton of work on the front end, right? Even if someone had a good system in place, like you see, it's that single point of failure, that person leaves, they're scrambling for 3 to 6 months trying to just limp along before we get a hold of it. And so there's still some work to do to just get everything cleaned up. We're not wiping the foundation in those situations, but, we're able to move the boards enough to and once those folks get up and running and stabilized, we have the ability to one, help them with their process. We've worked with hundreds of construction companies and we've seen, a lot of ways to do things. We've seen ways that work. We've seen ways that don't work. We've, seen a number of different problems that people have encountered. We know, how to solve those. We're not stingy with that information. We're not going to be like, oh, it's John so-and-so at this address, right, that did this and had this problem and this is how we fixed it. But we can say, hey, we've seen this issue before. Here's how we've seen other people handle it. And that worked well, right? And so we have that aspect. We have strategic planning, right? So if you're sitting there and saying, I want to grow my business, 20%, I want to grow my sales 20% next year, we can say, okay, well, here's what that's going to take. You need to get this amount of cash in the bank to handle that based on how your cash cycles are right now. And we can help you with that. We can help you with, can you afford to hire this person? Can you afford to, buy that new truck? Is that something that makes sense for your business? And that gets back to, you're a CEO. You're not, buying a fleet of $70,000, trucks because you like them. You're making business decisions based on information. And so, we get to participate and help people analyze that so they can say, hey, looking at this, what would it look like if I hired a project manager? What would it look like if we need a truck? What would it look like if we want to grow our sales 20% next year, and we can help them with that planning, we can help them get out in front of it. We can also identify situations where we can say, hey, we've got everything. We have this going on right now. Or we were able to say, hey, we have everything stable. We have everything caught up. Everything's clean. Looking at where you're at, we see a pretty substantial risk on the horizon. We're able to show them that. We're able to, paint a very vivid picture of what they're going. And a lot of times it's, they may have a gut feeling about it, but, numbers are, I love math. The English language is something I'm I'm always real fickle with, because it's, rules aren't applied everywhere. And it's like, well, sometimes it's like this. Sometimes it's like this, it's I before E. Well, except after C. Well, except in these certain circumstances or whatever. Right. And math, it's if an alien spaceship came down and you had 3 apples and you took one away, well, now you still have 2. You have 2 apples, no matter who's asking, who's counting, right? And so with accounting, you get down to that, and whatever gut feeling you have is now very concrete, very real, very understood, and we can, before it's that time where it's now time to go to the bank, because we can see 3 months down the road. You're going to run into some problems, and it's problems that you can overcome. They're easy problems. But if you wait 3 months to deal with it, now they're gigantic problems, right? But if we just go talk to the banker, he looks at your financial statements, he sees the problem. He says, oh, what is that banker seeing? I have someone that is staying on top of things, someone that has partnered with the right people. So they're going to continue staying on top of things, and they're recognizing issues before they come into reality. And, that's, a very small portion of what we offer clients, but really it's, we work with you to transform how you interact with the finances of your company, and for the better.
Yeah. Good stuff. Yeah. I like the quote. I think it was Warren Buffett said, accounting is the language of business. And if you don't speak that language, then if you're going to go to a different country and try to operate, you would either learn the language or find an interpreter, right? And so what I'm hearing what you're saying about what it looks like when you have your financial systems in place and have the right working with you guys, what I'm hearing is it allows you to be strategic. You can make plans and then execute those plans, growth plans. You can see problems coming in the future. You'll have clarity on what the real issues are. Are they issues? You can see clearly. It's not like you're feeling your way through this dense fog blindfolded. You can actually see things coming. And then when you can be strategic, when you have clarity, that allows you to make confident decisions. You can be confident that things are okay. And when I talk to a lot of folks, after getting to know them, if they're really being honest, one of the biggest things they're dealing with is just a lack of peace of mind. They wake up in the middle of the night. They're thinking, I have this team who's depending on me, and their families are depending on me, and all my trade partners are depending on me. And that can become pretty overwhelming. And if you don't have confidence that you have the right systems in place to manage all of that, that'll rob you of some sleep and cause some anxiety. So having that peace of mind, like what I'm hearing is the side effect, the outcome of this confidence, peace of mind, that you can look at the data, everything's going to be okay. We have a plan, we're good. And that does tremendous amount for peace of mind. So, well, this has been fantastic, Luke. So talk a little bit about, I think you've given a pretty good picture, but talk a little bit about who you work with, what you guys do, and then where people should go if they want to learn more about what you guys do.
Yeah. So we're pretty selective about the clients we work with. It is very much a partnership between us and the contractor. This isn't something where you can hire us and it's waving a magic wand and everything's going to, magically come into play for you. We're going to need work on your side. We'll be working on our side, but it's a collaborative thing, and we want you to succeed. And so we do our best to filter out clients that, they want to wave a magic wand, or if you think, bookkeeping or accounting is a necessary evil to do your taxes at the end of the year, we're not a good fit. Our purpose is to give a construction company the financial tools they need to confidently grow and excel at what they're doing. And if that's not what you're interested in, we'll ask you, what are your plans for the next 2 years? What are your plans for the next 5 years? And if you're saying, I don't know, I just, I'll do a little of this, I'll do a little of that, we're probably not going to, send you that invoice or that contract to sign up. And so we're looking for folks who they have intention on growing their company. They take it seriously. They're not interested in, just checking a box. They understand that this is really the key, right? As a business owner, if you think you can grow your company without interacting or understanding finances, you probably know better, and you're just telling yourself that. So we look for those folks. We do the best work with home builders, remodelers, spec builders, people that are even doing, fix and flips, stuff like that. And we can really fuel that work and give you the financial picture you need to get ahead of things. Of if this house stays on the market another 3 months, what is the impact of that for you? If the production schedule gets drug out, what is that going to mean for your bottom line at the end of the year, or at the end of this month, or at the end of next month? And, we have the ability to just really fuel that growth and make it strategic growth, make it controlled growth, to where you understand the problems, you understand the picture of what is going on in your company. And, when we bring people aboard, we have, like I talked about, we have all these processes in place. One of them we call the professional bookkeeping formula. And we've just figured out how to take someone, no matter where your books are now, no matter where your accounting is now, we know how to get you up and running. We know how to get you working effectively with, let's say you're using Buildertrend or CoConstruct or Procore and QuickBooks. We know how to get those talking together effectively using those. We know best practices for those programs. We know, if you're doing cost plus percent, if you're doing cost plus fee, if you're doing fixed costs, we know how to help you do that very well and manage that very well. And so that's the sort of folks we're looking for. And we even have a guarantee that if we're not hitting certain milestones within 60 days, we will continue working for free until we hit those milestones. Can you imagine, a contractor saying, hey, we're going to, framing is going to be up by this date, or we're just going to keep working on it for free until it is, right? It's just, it takes a lot of confidence in your processes to be able to make a statement like that.
Good stuff. So I think you have an offer for folks who are listening. What is that offer, and where can people go to take you up on it?
Right now, we have a small service on our website. It's not, when you become a client, you're paying the service, we're getting in, and we're starting to work right away, right? But a lot of times people just want to know where they stand. And we've met different people. We've offered this to clients of yours before when we've worked with you on the webinar and things like that. And so what we do is we are willing to do a diagnostic of your books. We want to help you understand where's your starting place, right? It's something you just don't know what you don't know. And so we can give you context for that. We can say, hey, these are the next steps that I would take. We can do all that. And so again, we have a process, and it's on our website. And if you want to go to apparatusteam.com, you'll see it, and it's on our own page. It just says, take the first smaller step, right? And that's that just reality check of, hey, here's where you're starting from. And click on that, and we're offering any of your clients 50% off on that right now, or anybody listening to this podcast, actually 50% off on this. It's let me pull it up here. It's a 15-point audit. And the price on the website is $299. if you're listening to this podcast, we'll have a special code or something in the show notes here, and we'll offer it to you for half of that. And so, this has been great for people in the past. We've had a lot of clients. We've had people come in who has, someone in the office that knows what they're doing, and we're able to look at their books and say, okay, you're not doing bad, right? I would do this, this, and this, but outside of that, you're on pretty stable ground right now. You're still, like you said, you have risk of, you're relying on one person. If they decide they, want to go to France for 2 months, you're in trouble. If they decide they want to have a baby, you're going to be in trouble. If there's all sorts of risk there, but, we've met those people. And what's funny is when we have those conversations, and those folks have something come up later, whether they're buying a new business, whether they're, have a partner that needs something, we're the first people they call, because, we're if you haven't figured out, we're willing to tell you that it's not a big deal. We're here to help people. If you don't need our help, we're not worried about it. But you can get that 15-point precision bookkeeping audit, clear goals, clear steps to take on what you should be doing to improve. And you can give it for half the price it's on the website.
Got it. So go to apparatusteam.com and click on the button that says take a smaller step first and get your
That's right.
precision, the Apparatus 15-point precision bookkeeping audit. Sounds great. Luke, thanks so much for coming on here. And then folks, if you want to find out more, you can go to apparatusteam.com, learn more about what the team there is up to. And I can tell you, we recommend the Apparatus team to all of our clients. They are Luke and his team are our number one referral partner for bookkeeping. And it's been that way for several years. I think we've been sending folks to you guys for 3, 4, 5 years, maybe. So fantastic experience, good results. So thanks for the work you guys are doing. Thanks for taking the time to be on here, Luke. Folks, be sure to go to apparatusteam.com and to get your 15-point precision bookkeeping audit. All right, Luke, thanks again, man. We'll talk soon. And hope you enjoyed that episode. Be sure to check out the show notes for more details over at constructionleadingedge.com/podcast. And if you get value out of this podcast, would you do me a favor? Would you please leave a rating and a review on Apple Podcasts or Spotify? And if you're watching on YouTube, please like and subscribe. If you own a construction business and you feel stuck, or you feel like you're spending too much time in day-to-day firefighting, maybe dealing with all of the problems, if everything's stuck in your head, or if you just don't feel like you have time or energy to work on your business because you feel like you're stuck working in it, if you want your business to run without you so you can take a vacation, or maybe to be able to sell your business one day, or if you just frankly want the business to survive if something happens to you, then there are 4 crucial systems that you need to have in place. Number 1, if you're a home builder, remodeler, or a commercial general contractor, you have to get paid for estimates. Those free estimates are killing your bottom line, sucking the life out of you. And you can get all the tools you need to get paid for estimates, the templates, sales scripts, pricing guidance, and let's face it, the confidence that you need. You can get all of that for free right now over at constructionleadingedge.com/start. You'll get the entire Get Paid for Estimates masterclass. Go to constructionleadingedge.com/start. You can get all of that for free. The second crucial system is that you need to design your business for the future. You need to establish the major functions of your business and the results that each function is accountable for. You need to have clearly defined roles and responsibilities. This is the foundation of every successful business, and the best way to do that is to design your accountability chart for the future. Number 3, you need to design and document your process to nail the handoff from the office to the field. This is a very disciplined and documented process that maps out every step of the pre-construction process. Look, companies that are good construction companies are actually good pre-construction companies. They're good pre-construction companies. And when you design your nail the handoff process and you have this in place, this is going to eliminate 80% of the profit bleeds and the schedule delays and chaos on your job sites. And you'll also need to learn the secret sauce for getting your team to actually implement and follow a process. Number 4, the fourth crucial system are the leadership systems that your team will use to convert your goals into reality. Look, somebody needs to be planning tomorrow's work today. Someone needs to be doing a 2-week look ahead. Someone needs to be establishing the most important things for the next 6 to 8 weeks. And you need to be having regular team meetings that are actually functional. Those are your leadership systems. And if you would like our help putting those crucial systems in place in your business so that your business can run without you, so you can get out of day-to-day firefighting and take that firefighter hat off, or if you want to be able to sell your business one day, here's the next step. Go to constructionleadingedge.com/apply and schedule a free business evaluation call with our team. On that call, we're going to do a few things. We'll help you uncover the real root causes of your problems. Number 2, help you get clear on your objectives that you want to accomplish. And then number 3, to map out a plan to make it a reality. We'll also share with you some of the things that our construction business owner clients are doing to accomplish their goals and solve the problems that you're probably dealing with. And then if you're a fit, if it looks like we have a good mutual fit, we'll discuss our Systematize Your Construction Business program. So to schedule your free business evaluation, head on over to constructionleadingedge.com/apply, APPLY. Hey, thanks for listening. I'll see you next time.